Alright, it is a Friday, 22nd of July, time is 3:20 p.m. Singapore. My name is Dylan. Welcome to my on the spot trading analysis video. Alright, so yesterday night we have the ECB press conference where nothing major has really been announced by Mario Draghi, president of European Central Bank. Although they stand to be ready, their readiness to add on more QE is still there. But just like any other central bankers, Mario Draghi has no clear vision of what's going to happen next after Brexit and stuff like that. So it's going to be back to the soft data, economic data, the inflation, anything that contributes to it, to see how the economy turn out to be before he make any decision to that. So in any case, that does cause the well, before we go into that, let's maybe alright. Since we already talked about this, might as well we just go to euro against US dollar. Alright, so what we have seen on the day itself, because nothing really major was being announced, no interest rate cut, no additional monetary asset purchases expansion. So at the very first place, we see that the euro spike up and it was being resisted at 1.1041, pushed all the way back and started to fall. Just today itself it recovered and it's just somewhere in the middle, so there isn't really a clear sentiment of whether the euro should be falling further or to appreciate. But in the long term, definitely we are still seeing that the euro will depreciate further, especially if we are talking about against the US dollar, where we have a lot of very positive data from the US itself, and that raises the bets for a rate hike by the Federal Reserve from 99% to 44%. Alright, if my memory doesn't fail me. So let's have a look at the technical charts. For hourly chart, as we have been talking about, price has broken is falling within a falling trend channel, has broken below a rising trend line, the bottom of the major consolidation we have right here that signals for the price to fall further, came all the way up, did not come back to the same to this region anymore. Rather, it pulls back and it resumed depreciation. So hopefully this is just a major a retracement itself, and price may resume depreciation soon. But the net selling itself is still not strong enough for the price to continue to fall further, but we have to see how things develop. In any case, in the long run, like I say, still definitely looking for the euro to weaken further in the near future. Definitely expecting that the ECB may have to roll out more monetary stimulus expansion, stuff like that. Alright, so still be looking to sell. In the 1 hourly chart, we have seen that since it broken below, came all the way back to a support and resistance level 1.1041, starts to come down, and right now they're just moving in consolidation. You can see that this is a downward consolidation, and it becomes a little bit of noise, but this is just news, so I'll put that aside. So more like a consolidation upward, but the price have not been able to go higher. In any case, if it really go higher, break above 1.1041, the next key level we have to look out for is the trend line right here, the bottom of the consolidation itself. So this level will be important if the price were to appreciate all the way back to here. Or in any case, if it completes the consolidation here and starts to fall within a downward falling trend, downward consolidation. Alright, so you may want to look for sell opportunity around the current price right now as well, but definitely would suggest that you set a stop loss somewhere at 1.1114 to be more sensible and conservative anyway. So that's for euro against US dollar. Oh, that's close to 5 minutes. And let's quickly talk about pound against the US dollar. We still see little change. Yesterday itself, the retail sales was worse than the forecast, negative 9 or 8%. Alright, in any case, that's bad. Worse than the forecast, definitely not good for the economy itself, showing signs of weakness in the economy after the Brexit. So, well, we definitely are looking at a weaker pound, like since we know that the Bank of England is most likely to cut interest rate next month, though we still have to be looking at the data. And the thing is that this week itself, with other economic data from the UK, which is positive, like CPI, etc. Except for the retail sales that did not perform well. Later on at 4:30, we will have the manufacturing and services PMI that will contribute to the decision of Bank of England to cut rate or not. All right, but definitely the impact of Brexit is something that will cause them to cut eventually. All right, I don't think the economy will turn out to be any better any soon. All right, there's going to be a big reform happening right here. So definitely looking for a weaker pound. And again, against the US dollar, the Federal Reserve most likely will be raising interest rate this year should the economic data continues to be positive. All right, so in any case, right here, the structure itself does suggest the price can appreciate further. Have to admit that, and probably not just right now. Probably if we have a positive data later on, we could see that the price will appreciate all the way back to the resistance level of 1.3316 and slightly beyond. That would then be the level that we can look for the sell. All right, and if that happens, have your stop loss set at 1.3487 minimally. I would suggest that, because we never know that if price will go all the way back to retest this level again. One of the major resistance prior to after Brexit itself, when it starts to come down. So there's a possibility for that. Might as well just shift aside higher. Right, so personally I will still remain a wait and see stance as well, whether to sell the pound against US dollar, but minimally I'll wait for it to reach some at the price of 1.3352. That's pretty much the level I'll be looking for the sell and see how it develops from there. Right, so next we have the dollar against the Swiss franc, which is pretty much affected by the ECB as well, though they have already unpacked the currency. Correlation is still somewhere. You can still see the correlation in fact, but not as much as before 2015, 15th of Jan, of course. So right now we are still on the overall chart itself. Day one chart, a quick recap: price is broken above the top of the falling trend channel once and twice. So that signals for the price to appreciate further, and it is also appreciating within a probable rising trend channel. Just have to wait for the price to reach the top to form exactly a rising trend channel. So we are seeing consolidation right here. Alright, it came out, consolidated, upward consolidation run. It went to a much bigger consolidation caused by the the uncertainty from ECB as well. I'll see that the price will go all the way back to the major resistance at 98.90. My sentiment is more towards breaking higher, since we are talking about the US dollar again. So this will be a good price to go for the buy. Set the stop loss below the bottom of the rising trend channel, somewhere here. 97, 96 will be a good level to set a stop loss, but definitely well, manage your risk well. That's what I can say for dollar against the Swiss franc. Now of course, let's talk about Aussie against the US dollar. Alright, basically I shorted, so good news for me. Definitely I am looking at a weaker Aussie against US dollar, because the probability of them cutting their cash rate is really high, and again US dollar is gaining traction, strengthening in terms of strengthening of its dollar itself. So right now we have seen it's broken below a major rising trend line, went up, retraced, got resisted for a while, consolidation, and right now we are finally seeing that is resuming its depreciation. Once it closed below somewhere right here, 0.75, 74.58, that would really pretty much warrant a further further depreciation. And I'm looking at least from here all the way back to the major supports at 0.7327. So you may want to consider to sell as of now. Day one chart itself, even with the trend line, they're still pretty far from it. I'm talking about 150, 170 pips of profit to be made from here. And if by then the Reserve Bank of Australia chose to cut interest rate, that will cause it to break even lower, and that's really pretty much to be made from. I do think that they will really cut as of now, alright, because The benchmark, which I've said in the past, 75 cents was the uncomfortable level. After Brexit and so many things has happened, the whole economy itself is just getting worse and worse. I do believe that benchmark has already dropped even lower, probably about 73, 74, around there. So this level right now at 74 definitely is not a desirable currency level for the Reserve Bank of Australia. So which is why that's of course my reason for that. And that's pretty much for today. It's Friday today, so later on services manufacturing PMI from the GBP. And is there anything else? Oh yes, Canadian. Later on we have the Canadian dollar. We have core CPI, core retail sales. If you are a Canadian trader, then the Canadian dollar trader, then just take note of it. If not, today's Friday, so be careful of the trading, manage your risk well, and if there's nothing really concrete about making a trading decision, let's wait for next week. So I'll see you again next week. Goodbye.